like on YouTube, comment underneath on YouTube, subscribe, follow me wherever you want. My free training as well, of course, is under the video on YouTube, and it's also under this stream, https://bit.ly/wheelsbpa. Okay, so that's that. If you are someone who's serious about trading, I strongly suggest that's where you go. So let's load up the US100 as I let everyone into the stream and I let everyone know that we are going ahead. You can see pretty much what we have here. It's really interesting because I've tracked the US100 and US stock markets, US indexes for a long time. I've posted a lot about them. I just updated my post that I had on TradingView, and I've got various US100 posts on TradingView and on YouTube and everywhere, really. What's really interesting with the US Tech 100 at the moment is this, more or less. You've had a strong downtrending market for a considerable amount of time. And that has very much continued. Now, you've probably got people who are falling into the trap at the moment saying this is a breakout. Okay, and this is why I did the video, if you saw it recently, about breakouts, why they don't work and things like that. And you'll get it again this time. There'll be people now who are selling this. Okay, now it's not that I don't believe it can go lower. Okay, it's just naturally that over the long term, imagine you roll the dice a certain amount of times, it's factual to say that the probability is lower that you're going to fall further than it is higher because you've already come down. Okay, so your move has already progressed from where it was most probable to where it's less probable. Okay, and that's why every time you come down, you've had this push up because these are probable long zones. So I do like the way your US Tech 100 is evolving at the moment via this downtrend, but I think it's likely that you're going to come nearer this 200 MA. It's actually a really key tech zone for me because you'll be at the bottom of your downtrend, you'll be coinciding with a key 200 moving average, and you've pushed off from the downtrend. It's okay to be buying when the market is falling. It's not always as if you're trading against the trend, because if you hadn't bought at these lows, then you would have missed all kinds of opportunities. Now, the reason why I highlight this level specifically isn't just because of that moving average. Okay, it's actually because of historic monthly price action slash support, which you can see I am labeling right at this moment with a horizontal line. So you can see we're stalling because we're getting nearer to this. And the reason why I use historical price action levels is because they're really how you get probability. They're the only thing you can go off if you're looking for a probable outcome. Okay, because you can see the price is previously rejected from that point. So you know it's an area of contention or rejection or price action, basically somewhere where the price has moved away from where it was before. So therefore, the probability falls further into your hands. It doesn't mean it's absolutely probable, it's 100% going to happen, by no means whatsoever. But you're putting the chance up, and that's all trading is about. The probability of your decision being correct. So you can also see around 14,050 points, you're at your 40 MA on your weekly. On your daily, you're cycling towards your 200 MA. Okay, so a really good tech zone within this downtrend. And that's where I like it long, really, for those reasons. It's a tech trade, okay, on a technical bias, completely. But would say within these indexes, you will have moments where there's respite. You might get it today with the GDP. You might find that the market just dropped slightly over here before rebounding. Okay, but nonetheless, I like this as a long zone. Like I said, if you're someone trading a breakout, you're now shorting into where people, professional traders, institutions, the larger smart money, is going to be getting long. You are playing into the hands of the people that are making money. That is what makes trading a transfer of money, really, from people who are making it to people who are losing it. All right, so that is never good because it means you are just totally on the wrong side of the market. That is simply why people lose money. I took on a new member lately, and we went through multi-time frame analysis. We spoke about it because I was saying, look, yes, you might have a pullback on your 5 minute, but your your overall trajectory is moving down. So your pullbacks are going to result in a continuous downflow. Okay, um, until it stops and you start to get long. But the further down you trade those, like now, you can see that instead of it falling, it starts to rise. And as the trajectory of the market changes, these 5 minute moves are going to be rises. They're not going to be falls. So if you're selling into it, then naturally you won't be making money because it will start to do something like this. Okay. So you need to be really careful of that. You need to be careful where you pick your long entries. And for anyone who says higher timeframes aren't important, it's just completely wrong. Higher timeframes rule the market. They are what drives price from one point to another over the long term. Okay, so you can see we're heading towards key support, and I would expect a bounce at that point. If I'm wrong, I will continue to DCA as you fall through. In other words, I'll make new entries lower down nearer your other MAs because I'm measuring and gauging the price over time, so I can get the best outlook and, like I said, the most probable outcome. Okay, that's what it's all about. Probability, like I said. Now I'm just going to go over the Dow Jones, the US30 as well. Again, in the US, so it's probably a good time to talk about it. For the Dow Jones, okay, you have had considerable fall for a number of weeks. Off from the top here, 31st of July, we're now coming to the 23rd of October. The week starting 23rd, so ending the 30th. You can see that this candle is just pouring you straight back down, and every pullback is the same. That is what happens when you get candles like that, and it coincides with former price rejection. As you drip lower, again, your bias is long. You're not looking to sell, because if you're selling now, you're selling into where people are buying. If you don't believe me, look at the chart. You don't have to believe me, just believe the candles, because they tell you where people are buying. They tell you where people have got out of their orders and where they're likely to change their buys. You cannot just pick any candle wick you want and just say, I'm going to get long, because it's not going to work like that. You won't make money trading if you think that's all there is to it. Everyone would be rich if that was the case. It's not the case. You need to learn what works. Hence, what I've just discussed in regards to going under this stream, under this video, my link is right there. So on your monthly, you can see just under where you are now, there is candle wick there, okay? And you've seen previous levels of rejection all around there. So you know there's price action levels, you know there's rejection. And for that reason, again, similarly to your US 100, I think you've got a little smidge of room lower before you get long. However, having said that, you know, you can see, and this is really interesting, you can see that this green candle here is a very weak push. So you know there isn't buying power. You know that this level you previously hit is not supplying the goods and pushing the market up. Your stochastic looks ugly. And that is why you've got a second running red candle pulling you straight down. Okay, so you're coming straight into that low, and that low is not providing the impetus one would need to trade a move up. Therefore, you're dragging down, and that is why my bias remains, in the way I said, slightly lower. Okay, because slightly lower, you have got considerable levels of support and considerable levels of historic rejection, and you know that this hasn't done anything for you. Okay, it's similar across many indexes. It's the same, like the UK 100, etc. And there is just not enough of a push, and the sentiment around it is too weak. You've got a lot of growing market sentiment globally now anyway. And then if I was to look short, okay, I really need to come back to where we've shorted before. I need to come back to this mixture of key moving averages so that I can enter the market. So I'm not looking short in the Dow Jones until you get considerably higher. I've missed the move. If I wanted to short it, I should have shorted it there. I'm pretty sure I probably called that anyway. But within this steep downtrend, this low is not doing much, and I wouldn't be shocked if you go lower. Don't be one of those guys who pretends you can't get a lower stochastic oscillator or RSI, whatever you're using. And don't be one of those guys who shorts down here. This is not the time to sell. You should never be shorting a low indicator like that. You should never be buying a high one. Doesn't mean to say the price can't keep going that way, but again, like I said, it's about probability. It might happen this time, it might happen another time, and that's why people get carried away with their results. If they make money early in a trade once, they'll say, wow, I got it right. Wow, this is amazing. And then they get it wrong, and they seem to forget that they're getting it wrong until they get it right again. They go, wow, I knew it. You know, it's just not a good way to be. And it's not a profitable way to be. So don't be like that. You're looking for consistency, you're looking for probability. You've got to find it in a repeated market. So that is your US 100 and that is your Dow Jones.